given Sam's history of masking his appearance and being very cold and calculating about his publicity, I could definitely take the argument. Maybe I would lean to the argument that this is also part of his plan, that this is also very much calculated.
Yeah.
And he's using this kind of childish, I was too young, got caught up in things.
I'm learning my lesson. I'm sorry.
But that can't work, right?
No, absolutely no. Because
he stole $16 billion.
Because he stole $16 billion.
Bankless Nation, happy first Friday of December. David, hard to believe we're in the 12th month of the year, and I just want this year to be
best. Is it? It is the best. December is the best month of the year.
Oh, your birthday. I knew this.
Oh, no, I'm not going to be that narcissistic about it. I mean, it's a contributing factor, but perhaps, yeah.
I didn't mean to imply. Yes, of course. I'm sure you think Christmas and the holidays and spending time with loved ones.
Yeah.
These
Skiing,
are the reasons.
yeah.
Nothing to do with your birthday.
Right. Well, I mean, it's just one of many nice things about December, yeah.
Well, I'm glad for this year to be over in crypto.
Yeah, also that.
I want to put this behind us.
Also, I'm claiming that it's going to be a bullish month. Prices will be up in 30 days.
Do you remember, I think the depth of the bear market was like December 2018? Or was it 2019 last time?
Yeah. Right at the end of the year. Yeah.
But you already think we've bottomed?
I think so, yeah.
What? All right, we're going to talk about that. A few things to talk about this week. Number one, SBF, he's given interviews now.
What the hell?
All right? Against legal advice? I can't imagine his lawyers are very happy about this. And
he's going on a tour, dude.
Why?
The SBF redemption tour. The redemption arc has already started. But before we get to all of that mess, we got to talk about all the bottom signals and why I think it's going to be a bullish month. Because bottom signals, Ryan, are abound. And there's also some bullish signals. The Ethereum ecosystem is winning some key infrastructure from other chains. Also, layer 2 ecosystem metrics are at all-time highs. But there's one big announcement, Ryan, that I know you're super excited for.
I'm super excited.
Do you want to tease it? Or do you
Well, this could be the biggest bottom signal at all. Maybe I'll just say it.
Hopefully.
And we'll tease it. Okay? We acquired a company.
What? We can do
for
that?
real this time. This is not a Wells Fargo prank. This is not, us putting our Bankless name on the Philadelphia Flyers stadium. This is real. We really did this.
The podcast?
And I'm super excited.
The
a podcast did this. Seriously, guys, this is a new tool for the Bankless Nation. We want to tell you all about it. So we'll get to all of these topics. David, before we get into this episode, though, we got to shout out our friends, longtime friends, really, and sponsors at OPOLIS. OPOLIS is a seriously fantastic product for benefits, healthcare benefits, and payroll. What does OPOLIS do, David?
They help you go bankless. The Web3 world is not very friendly to independent entrepreneurs or anyone who really wants to work in the chaos that is Web3, yet still have the fantastic order of the benefits that you would get at a normal 9-to-5 job, such as healthcare and payroll and tax services, like all of the requirements that you need to work and live inside of a nation state while also working in the freedom of Web3. OPOLIS can help you get that done. And so it can, if you are just a Web3 entrepreneur, you're an NFT artist, you're working in a DAO, all of these like loose employment structures, but you need all of the structure to, have healthcare for your kids too. Don't forget about that. OPOLIS can help you with all of that stuff to make sure that you can do exactly what you do best, which is work in Web3, work on the frontier. So there is a link in the show notes to book a meeting with a membership success steward. And if you do that by December 31st of this year, which is coming up, you got 1 month, you will get 1,000 work tokens and 1,000 bank tokens. So start 2023 off right with healthcare and other things.
That's right. And believe me, David, when you have kids, you never forget about your kids' healthcare.
Yeah,
it's like number one, super important.
When I told my mom that I lost healthcare between jobs, she laid an impression upon me, and I haven't done that since.
Well, okay. How long were you off of healthcare?
It was like 2 or 3 weeks.
Just 2 or 3. That's not bad. I mean, some people do for like months.
Even that, she was like, David, you can't do that to me.
I think we just got healthcare set up, and you were like for Bankless for you and I, and you were like on a scooter one day, right?
Oh yeah.
Am I remembering this? And you were looking down at your phone. This is early days of the podcast, and you like flipped off your phone and you showed up to a Bankless conversation we were having with like a missing tooth and like a black eye. And I'm like, oh God, I am glad we got healthcare before this incident. Do you remember this?
I don't think that was, I think that was well into Bankless. I don't think that was at the beginning.
Oh man, it all blurs.
That was
to me,
a year and a half into Bankless. We definitely had healthcare. But yes, I did land on my face after falling off a scooter.
So you never know. Comes in handy. All right, guys, let's talk about Bitcoin. Is it falling on its face? Did it just fall off a scooter or is it doing okay this week? Up or down?
Can we forget about this scooter?
No, I'm not going to forget.
Bitcoin is up 2.5% this week, so it stayed on the scooter.
Happy music.
Yeah, it started the week at $16,500, ending the week at $17,000, up 2.5%. Nice job, Bitcoin.
And ETH this week, what's it got? A motorized scooter? It's like a moped scooter.
God damn it. Ether is up 6% on the week. Started the week at $1,200, ending the week at $1,275. 6%.
You know what? David's so tempted to call the bottom. He's so tempted right now to be like, Ryan, we're never going to triple digits. And the last 7 days proves it, aren't you? I'm just reading your mind right now.
God, I would love to be able to call the fact that we're not going back to triple digits.
You're not going to?
I don't have complete confidence. Well, like... It's going to be a long 2023, and it's going to be crabbish. Yeah, I don't know.
Do you know?
But
Okay,
damn, it feels good, man.
We actually didn't include this in the agenda because it was just a thing. But Powell had a meeting this week, and he was super dovish in the meeting on interest rates. It just like giving very warm signals that like we'd reached the top as far as interest rates, and stocks really popped after that. And I think crypto's up as a result of that too. So that could be playing in. Anyway, we'll talk about that in future weeks on the Fed Watch. But tell us about the ratio, up or down, ETH to Bitcoin.
Bitcoin ratio up 3.7%. We are currently at 0.0753. Nice.
This ratio is holding strong. In fact, it's
doing great,
overachieving.
Man. It's doing great.
Is that why so many angry Bitcoin maximalists are in my mentions these days?
Is that new?
It gets worse when the ratio's up. Believe me. I think there's a correlation. Let's talk about total crypto market cap. Where are we? Under $1 trillion still?
Yeah, still under $1 trillion. We're at $890 billion. We gained $20 billion in market cap on the week.
Okay, not a bad gain. Bottom signals.
Yeah,
David,
we got some bottom
these
signals.
Okay, what are the bottom signals?
So one of the big bottom signals going on is just the absolute wreckage that is happening in the Bitcoin miner world, which sounds bad, which sounds bearish, but that's why it's a bottom signal. This has always marked close to or the bottom in previous cycles where Bitcoin miners are not profitable. They go
to business, right?
Yeah.
They go bankrupt, don't they?
Many of them do, yeah. So an Antminer 19, which is one of the most recent miners, Bitcoin ASIC units, one of the more recent ones, is now a negative unit at the average United States industrial electricity price. So if you have one of the more modern Bitcoin miners and you have average American U.S. industrial electricity, you are not making money as a Bitcoin miner.
So what do? You turn them off, right?
You turn them off, yes, right. You also sell Bitcoins, by the way, which is what this graph is showing from Will Clemente. Bitcoin miners have been selling relatively aggressively, combined with a hash rate decline, and thus today's hash ribbons bearish cross, which is what the graph is indicating. This indicates that we are indeed in a period of miner capitulation. So miners have bills they got to pay. They're selling Bitcoin at the bottom to pay those bills. They're turning their miners off, and these are all things that happen at the bottom, Ryan.
Oof, look at all this red. That's what
a lot of red.
A hash ribbon bearish cross looks like. It looks like a lot of red. What about this one from Zach Vowell?
This is from Zach Vole, who pays attention to the Bitcoin mining world, and he just documents everything that happens in mining in a month. Bitfarms pays down $27 million of debt. Cathedra announces payroll cuts. Iris Energy is unable to service loans and unplugs machines. Manitoba, I don't know any of these mining companies. Manitoba. Enacts 18-month moratorium on new mining projects.
That's a Canadian province, not a mining company. But
I had no
Canada
idea.
facts.
I had no idea. New York governor signs 2-year moratorium on new mining projects. We've covered that last week. Hydro Quebec, which I'm assuming is a Canadian utilities service, asks Canada Energy to suspend allocations to miners. Oof. Applied Digital launches a $100 million fund for distressed crypto assets, including mining. Stronghold reports a net loss of $50 million in Q3. Compute North sells mining assets to Generate Capital, its former lender. and a bunch of other mining related topics. But yeah, just like a bleak month in the world. A
lot of blood in the
Bitcoin
streets.
mining. Yeah.
Is it time to buy blood in the streets?
So if you are a capitalized miner, you are buying blood. Yeah.
But you have to not be out of blood in order to buy.
Yes, you have to have your own blood. Yes.
You need some blood bags.
This is weird.
Ryan Selkis tweet. You say this is another bottom signal, DCG's death. So we did a few episodes on DCG, and we called this the last domino to fall. To fall, and this is, of course, Genesis that we're talking about. This is Ryan Selkis tweeting: the reports of DCG's death are greatly exaggerated. DCG is fine. Masari will report tomorrow. I guess they reported today, but what's the TLDR of this? Is DCG actually, maybe that last domino to fall hasn't fully fallen? Maybe it's just wobbly, or maybe the fall won't be as hard? Is that what we're looking at here? Yeah,
I'm trusting Ryan Selkis's analysis and interpretation of events here, but he's just saying that, like, yeah, DCG got hit, Genesis got hit, but they're gonna make it. They're gonna make it. They're definitely gonna have a scar, but they're gonna make it. Which means that that's the contagion stops there, if that is true.
You think the contagion stops there?
If that is true.
Okay, if that's true. If that's true, the contagion to stop there. I think some other veterans are calling for the bottom, and this is not yet backed by evidence, all right? We're seeing things like Bitcoin miner capitulation, which we see at the end of all bottom markets. We're seeing maybe the last of the contagion and start of a restore of health. I still personally think, David, we've got the doldrums ahead of us, where apathy comes into the market we've talked about. But some OGs, some veterans are also saying that this feels bottom signal-y. This is signal-y. Bottom signal-y. This is Phil Bonella, who's been in the space for a while.
Everyone podcast,
yeah. Oh, yeah, that's right. Hey, Phil. Everyone that could be broken has been. Everyone that could be broken has been. There's nobody left to sell and no margin left to liquidate. The risk reward has not been this attractive in 4 years. It's not easy, but right now it pays to be an optimist among pessimists. By the way, that's what the bottom feels like.
Yeah.
It's like it starts to really pay to be an optimist when everyone else is pessimistic. The
100%.
opposite is also true, by the way.
Yeah.
You want to be pessimistic when everyone's overly exuberant and optimistic. What's your take on this?
Yeah, I think this is a sentiment that is shared by many people. Chris Berniski recently like formally flipped, as in he's saying that he called the bottom. Eric Wall, who has had Barrick Wall as his Twitter handle for like over a year now, has now become Bullick Wall. I know it's a meme, but these are veterans that have seen these cycles before, and many people are saying, like, yeah, just like this feels right. And we can do a bunch of like real technical analysis on charts. You can look at like minor capitulation. You can like try and look at numbers. But I mean, at some point, gut feel by veterans is just as valid as a sentiment indicator as many others.
Veteran holders, in particular, who've been through multiple cycles, those are the ones I pay attention to.
Right. Yeah. And so, Ryan, you're like, oh, I totally could see just like the doldrum, what'd you call it last week? Like the apathy bottom, where we spend a year of going flat and then people just check out because crypto prices hasn't gone up, and then you get the last capitulation to wash people out. We kind of had that throughout the last bear market. So we had like there was the 2018 bottom at $82 was like the capitulation bottom, which to me feels like the 875 Ether bottom that happened last May.
Yeah.
We had a recent bottom at like a $1,100 ish, maybe a little bit lower, and then in so fast forward out of the 2018 bottom at $82 into 2019, there was like another bottom at like $120 when it got down that low, and then there was the March 2020 COVID crash back down to $80.
Briefly,
I think without that COVID crash, we would have had higher lows throughout the entire crab market. So $80 in 2018, $120 in 2019, I don't know, $150 to $200 in 2020. But then we had the COVID crash and it took us down to 80 again. So like, that's why I'm like, David, don't call the bottom. Don't call the bottom. Don't say Ryan's wrong. But also, I really, really want to, because
you could be right. It's just to me, we're in the bottom range. We're in the bottom zone. Like what I would call for in kind of apathy layers, like from ETH, something like 40% off where we are now. Like that could happen. But like, I'm not one of those people were calling a few months ago for like $100 ETH, right?
No way.
We ain't going there. All right, we're too bottomy to hang out there. And so I could see things like this happen. Plus, by the way, David, is like you mentioned the COVID crash. Yeah, it's kind of those black swan events that could pop up at any point in time and take us back down. But I'm in the bottom zone too.
On the horizon, sure.
Yeah, I don't want to call an exact bottom because I'll always be wrong, and I'd rather let you you be wrong on this podcast with strict bottom calls, David. But I'm willing to certainly call we're in the bottom zone. It does feel like this. I think the vets are right. All right, let's juxtapose the bottom signals because we have all-time high in layer 2 land. What are we looking at here, David?
Yeah, so this is a pretty awesome chart of the amount of weekly gas that layer 1 Ethereum block space that is being consumed by layer 2s. And that chart is so awesome. So it's if you go all the way back to January 2020, it's basically at 0. And it is just a hockey stick up and to the right to where we are in November. And November was a killer month for layer 2 gas consumption. It seemingly almost doubled previous months of time. So what does that mean? That just means activity on the Ethereum layer 2 ecosystem is like huge at all-time highs in a very big way.
This is a long-standing Bankless thesis that is playing out.
Yes.
And it's taken a little longer maybe than some thought to play out, but it's totally playing out. Like directionally, it's been correct, and it seems to be more correct. This is a stat for ARBITRUM. What are we looking at here, David?
Yeah, I want to highlight 2 specific layer 2 ecosystems. One is ARBITRUM, which is at all-time highs of unique contracts deployed. So contract addresses, smart contracts that are deployed to ARBITRUM had basically an all-time high. Apps, yes, exactly. And then also daily transactions, which is the next tweet. Daily transactions on ARBITRUM are also at all-time high. Here's HOP protocol. So HOP bridged $158 million in the month of November, which is up from $98 million the month before.
Wow.
100,000 unique wallets, Ryan,
this is
bridged
so great.
using HOP.
Look, layer 2s can be the new centralized exchanges at some level. What I mean by this is like we saw these stats last week. People are moving their funds from centralized exchanges and they're going bankless. 100%. And you could keep that on mainnet, or you could go to layer 2s. I'm glad to see people exploring the layer 2 universe. What about
Here's
this
an
one?
app on layer 2. This is, I believe, on ARBITRUM. Yeah, GMX, of course. Heavy DeFi power users will be familiar with GMX. Had more daily fees than Uniswap.
What?
A layer 2 application generated more daily fees than Uniswap on the layer 1. That's insane, dude.
This bears looking into.
Yeah,
I think we should do get an analyst piece on this.
Yeah,
on Bankless.
I mean, we've had an analyst piece. Ben from the Bankless Analyst. If you pay attention to the Bankless newsletter, you've known about GMX months ago when we covered it.
Are you talking about me? I remember this.
No, I'm talking about you, the listener.
Oh, I was like, I thought you were calling me out for not reading our newsletter.
I would never do that.
All right, wait till you see my Spotify rap scores. Bankless is not the #1 podcast. That's just because I listen to it at Apple. All right.
Yeah, right.
What are we looking at here? Oh, I think you got some tea.
I got some tea. I got some alpha. Yeah.
Okay. Alpha in a bad way though. It's like coming from the rumor mill or sources.
Yeah. So you know those tweets that people on Twitter make fun of when they say, "Here's a big claim, sources," and then like the sources. This is that. So a source.
Oh, you're doing that.
I'm doing that. Yeah.
Okay.
A source has. So this is a tweet that says, "Is there a leaderboard for best performing VCs? Multicoin won 2021, right? Like they were the best performer in 2021. What about 2022?" And I was just looking. I just wanted some data because I was curious. So a little bird came into my
data
mentions
on Multicoin.
On VC, best performing VC funds in 2021 and 2022. And so a bird came into my ear and whispered to me the state of Multicoin. Multicoin's Fund 1, Fund 2, and Hedge Fund.
Spill it.
So after FTX, they lost money in FTX. After like the Solana, all the other like alt layer ones that they've invested to didn't have great price action through 2022. Fund 1 is at a 1x.
Multicoin's Fund 1 is just a 1x?
Is just a 1x, yes. Fund number 2 is at 0.4x.
Wow.
So what does that mean? They're down 60%. Allegedly, the hedge fund is also below watermark. And when everyone was like, "Oh my God, Multicoin has made so much money," apparently Multicoin, when they report the value of the fund, they mark to market their tokens, which is a big no-no apparently in the VC space.
You just take the CoinGecko price, you multiply that by the amount of tokens, but there's not the liquidity to actually sell your entire stack.
Back it up. Yes. Also, like there's vesting schedules. So like various funds mark to market their tokens with a discount, sometimes heavy discounts, like over 50%. Apparently, Multicoin was just like mark to marketing the full value of their tokens without taking in any illiquidity, and you could assume used that to flex It's like, look how much money we made, even though like there's not enough liquidity there to support it.
Yikes. So first, I will say, of course, this is sources.
This is sources.
Quotes.
Sources.
All right. So this is, has not been confirmed. Remember, David nor myself.
We are not
sources.
LPs in Multicoin.
We're also not journalists. So we haven't done the due diligence, but like I could see this being true. What's interesting is 2021 was just a absolutely breakout year for Multicoin. I remember even Ryan Selkis last year, I think Multicoin Kyle Samani was on his like top people who've turned things around list. Multicoin in 2018 was sort of on the shit list really for the EOS and, kind of getting fully behind that and for that kind of tanking, never recovering. And then they kind of had a redemption story in 2021. Looks like 2022 has fully reversed all of that, regardless of what the numbers are. I think that is true. Some of these alternative layer one liquid investments have not paid off. And this is not just Multicoin, by the way. I think there's a class of hedge funds that have been playing in this space as well. I'm
willing to bet Multicoin got the brunt of it because they were the fund that like exemplified the alt layer one trade. Also, I would say like when I was talking to the person that gave me this information, my response to them was like, it's crazy how strong the rule of fast up equals fast down played out in crypto. FTX rose out of nowhere and became massive and then disappeared in the blink of an eye. Same thing with like if you made money too quickly, it went away. Ultimately, when the bear market turned.
Easy up, easy down.
Yeah, exactly.
Do you want to see kind of a jerk tweet? It's a little bit of a jerk tweet, but I think exemplifies it. So, fun fact, last year, December 31st, 2021, I tweeted this out, and this is like alt
this was the
mania.
top of alt layer ones. Yeah.
Yeah. So I tweet out, I think alt layer ones are largely overvalued. And I was largely thinking of David, Luna. I was thinking of Avalanche, AVAX. Yeah. I was thinking of Solana, just that they're overvalued based on their fundamentals. And then I said, what's your best argument for why I'm wrong? A lot of people gave fantastic responses. Kyle comes in hot from Multicoin, and he's like, let's bet on the Sol ETH price, end of year 2021 versus end of year 2022. So that would be now. Want to check on that price for me?
Oh no!
Right?
What is it? It started at that moment. Is this time frame that you're showing on screen? Is that the time frame of the bet?
Yeah, we are down.
Okay, so we started at one Sol used to be worth 0.046 Ether. Yeah. This is like the Bitcoin Ether ratio that we talked about at the beginning of the markets, but now we're doing it for Sol. And now it's at 0.012. So that is a down of 0.046 divided by 0.012, almost 4.
I'll just
a loss of, yeah. So ETH is up 4x versus Solana in that time.
Yeah. Fun fact, we also didn't actually make a bet.
Yeah, I know. You wouldn't make a bet. Yeah.
You know I wouldn't make a bet. But yeah, that's how confident people were, I think. And look, I'm not picking on Kyle, Multicoin, but I think the alternative layer ones had a crazy explosive year in 2021 and it's basically rewound all of that and gone backwards.
Congrats to those who sold that trade.
Sold the top. I bet Kyle did. I bet he's doing just fine.
Yeah, it's personal funds. Not the fund, apparently.
What are we talking about next? What's coming up next?
Sorry, Kyle. Coming up next, we judge SBF's ability to spin a narrative at the New York Times Dealbook Summit. We'll judge it out of 10. How well did SBF spin a narrative? We'll also share some reactions from Twitter. And we'll also talk about the Infura debacle. Is Infura selling your data? Or is the internet selling your data and the Infura system is just a part of it? We'll unpack all of that and more right after we talk to some of these fantastic sponsors to help you go bankless. Arbitrum One is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on Arbitrum One, producing flourishing DeFi and NFT ecosystems. With the recent addition of Arbitrum Nova, gaming and social dApps like Reddit are also now calling Arbitrum home. Both Arbitrum One and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free. In all of my years in crypto, I've never been hacked, scammed, or lost money to a thief, and a lot of that credit goes to my Ledger hardware wallet. The Ledger Nano X and the Ledger Nano S Plus hardware wallets allow users like you and me to secure and manage all of our crypto assets and our NFTs, all with the security of storing users' private keys offline and out of reach from hackers. The Ledger Nano X is the perfect hardware wallet for managing your crypto and NFTs on the go because it connects to your phone with Bluetooth and has a nice big screen for easy transaction readings. Ledger has also upgraded the iconic Ledger Nano S and made the new Ledger Nano S device more DeFi and NFT friendly, making it the perfect hardware wallet for beginners. Ledger has truly maximized for both ease of use and security. So discover which Ledger device is best suited for your journey by going and visiting shop.ledger.com.
David, I think people listening are like, when are these guys going to stop talking about FTX? And I really want to.
I would love to.
I want to stop talking about SBF. I want to stop thinking about him. But he keeps coming back and hunt. Like, I was trying to like do something else last night, and then he pops on for a 1 hour interview with the New York Times that was broadcast by CNBC. It was absolutely insane. I couldn't look away. Like, we're trying to figure out the psychology of this guy. So give us the context here. What's this tweet from DC, and how should we start dissecting the interviews SBF has been doing over the last 2 days?
Yeah, so this is a tweet from DC, which is just giving his take on the summit itself, the Dealbook Summit and the interview. And DC goes, I'm only 30 minutes in, but I want to thank Andrew Sorkin for not making this a puff interview, as we have seen from the New York Times in recent days. I was extremely skeptical up front, but he asked hard-hitting questions collected from the community FBS harmed. Good job. So this is one take about the Andrew Sorkin SBF interview. This sentiment was not shared by everyone. Ryan, you said that it was insane. What part of the summit do you think was insane? Like the whole thing, the questions? What did you think?
So I just caught, I think, probably the last maybe 45 minutes. I think it was fully an hour. And giving people context, it's called the Dealbook Summit, right?
Yeah.
Is that what it's called?
Dealbook.
Broadcasts on CNBC, I believe. New York Times kind of, I believe, put this together. Professional interviewer, Andrew Sorkin, and was not a puff interview. I mean, like, so Andrew was asking SBF questions like, what do your parents think of this? They're lawyers, law professors. How did they react when you told them? He was asking questions about, tell me about the drugs, Sam. He was saying, like, where did all the money go? Like,
sleepover.
This was, yes, he, at one point he said, it looked like a whole bunch of, Ritalin kids just in a drug-filled sleepover playing with people's money.
Right. Which is not wrong.
And it was a great interview, honestly, from the interview.
Okay, so you're giving a thumbs up to the interviewer.
Yes.
Okay.
Where the weirdness comes in for me is Sam Bankman-Fried. I don't know how many times he said, I'm sorry. I was irresponsible. Right. He looked like a kid brought into the principal's office. Actually, let me pull
That was
this
the
up.
pose that he took too. Just imagine a kid like swinging his legs in a chair with like his shoulders hunched up, like looking down at his feet.
Exactly. That was the posture. That was everything. Actually, let me pull up some of my tweets. I said this conversation's insane, and then he was just sharing everything. I remember that was it's like TMI, man. Like, you don't have to do this, right? Aren't your legal experts telling you to stop? And then it just started feeling like a full confession. Right. He was saying everything. It was all out there. He talked about, so he answered Andrew's question about what drugs he was using. And then there was this one question Andrew asked him, so what did we learn from this, Sam? What's your future, Sam? And then SBF's reply was, I don't know what's going to happen. A lot is not in my hands. I want to be helpful. I don't know where this all will lead. It felt to me, David, like it's like a child speaking. It was very childish. I mean, this guy stole $16 billion. Right. What does he mean he doesn't know what's going to happen? Like, he's going to jail, right? And that's what should be happening. Right. The whole thing struck me as very, almost like infantile. Like Andrew speaking to a child, coming to the principal's office.
Well, that's what he said. He called it a sleepover. You and your FTX leadership were having a good sleepover for, months. And there was theft and drugs
was just involved. Like, these kind of like golly gee type responses, like, I'm sorry, I didn't mean for this to happen. I don't know what's going to happen next. Dude, you stole $16 billion.
So you said that this was like a confession by SBF. That's not what I saw.
What'd you see?
And so if I'm going to rate the Andrew interviewer, I'm going to give him 7 to 8 out of 10, where he did not, he approached the right subjects and he did press. He was not informed enough or chose to ignore things that he should have doubled down on. And if I was going to like, as a somebody who like, organizes interviews and does a lot of interviews, it felt like Andrew was like, okay, here's like 6 or 7 topics. I have an hour. I need to ask 2 or 3 questions about each topic to hit all the topics. And then we're done with the interview. That's great. Forgetting that like 2 or 3 questions might actually lead to more, and you need to press Sam when you are at the end of their questions if he has not answered the question. So Sam answered the question to the ability that Sam wanted to, and then and then Andrew was like, okay, we're done with that. He let him
get away with things.
He did not press him in the way that I would have pressed him. So very importantly, no one coming out of that interview would be like, oh, Sam stole money. Like that was not an impression that you might have been left with.
David, do you see the audience reaction? Like
people were clapping for him. Like Sam Bankman-Fried, everybody.
People were so at one point in time, Sam was like, "I'm not gonna lie, it's been a bad month,"
and people laughed.
And there's like this pause, and there's like laughter throughout the audience.
I mean, I don't know. Kind of funny.
Look, some of this is just human empathy type of reaction. Like, so I get that, but I think. It's also very hard in these interviews because I think you're trying to understand the person. And so there has to be some level of like empathy in order to get into the person's mind. And yet you have to hold them accountable. I don't know. I guess my expectations for Andrew in a mainstream media interview going in were so low that I would even rank Andrew higher than like 7 or 8. But like we're probably largely in agreement on that.
Okay.
What about the Sam piece? How would you rate that? You said it didn't feel like a confession to you. What did it feel like to you?
I think I want to get to the answer, but Ryan, I want to go through some of the tweets of this specific interview, and then we'll eventually lead into that answer. And so this is the very start of the summit where Andrew Sorkin is applauding Sam for even showing up and giving the interview, and then the crowd starts clapping, and then Andrew's like, Sam Bankman-Fried, everyone, and everyone's like clapping for his bravery of even showing up in this particular moment.
These are some hearty claps too.
They were in
the audience I'm seeing.
And so like that's how this whole thing started. Moving on.
This one dude though, do you see this one dude? It's like crossing his arms. That's me.
Yeah. So Andrew leads this interview with an email that was sent to Sorkin from a customer who had apparently his life savings inside of FTX. And this customer said, "Can you please ask SBF why he decided to steal my life savings?" And SBF replies to this man and he goes, "Yeah, I'm deeply sorry about what happened." And like, because what else can you say? I'm deeply sorry about what happened. Yeah. Okay. So next part that I wanted to bring up, I did not knowingly commingle funds. So this was like one of the first moments that SBF was pressured. And this was when he was asked about like, okay, did you know that FTX was sending funds over to Alameda? And Sam was like, I did not knowingly commingle funds.
This is a straight lie though.
This is a straight lie. Yes.
A straight out lie.
Yes. And so when asked about like where'd all the money go, Sam starts with US FTX, which he says to his knowledge is fully solvent. And then he turns to the international platform. And when he talks about the solvency of the international platform and where all that money went, he starts to talk about leverage and how margin systems work. And Ryan, this is, in my opinion, the point to focus on.
A complete dodge.
Where is all of the money? And Sam goes to explain to you margin trading and leverage and how what that is implied, and we'll get to this again throughout this conversation, is that instead of Sam taking FTX customer deposits and giving them to Alameda, he's saying that Alameda took out such a large margin position on FTX that it wiped out the entire exchange. So instead of an explicit transfer of value from customer deposits to Alameda, there is an implicit transfer of value through Alameda's margin position, which he claimed that he had no oversight over Alameda, and he apologized for not having any oversight of Alameda, but he was unaware of the massive size of Alameda's leverage position on FTX, and because that it was of the way that margin systems work, and this is why he's explaining how margin systems work and leverage, that it was an implicit transfer of funds from customer deposits to Alameda. But then the interviewer asked, like, okay, but you're not allowed to do that with customer deposits unless because of the terms of service of FTX. And then Sam goes, well, that's one part of the terms of service, but another part of the terms of service says like, we'll give you yield if you do let us do it. And then he just dodges it. And this is the moment that Andrew Sorkin did not press him on that.
Yeah, I get it. Yeah, I get it. So Sam's like, I didn't actually steal the money.
Right.
What he actually did was like, I gave it to a friend.
No, I let the mechanism of margin trading allow an implicit transfer of value from anyone who is trading against Alameda to Alameda.
I mean,
which is a lie because he also straight up sent FTX customer deposits to Alameda, yes. Which is the important thing to remember.
There are other parts in this conversation, by the way. I don't know if they're here, David, but like where Andrew's asking him about the $300 million of property that he purchased in the Bahamas, and including like luxury apartments for his parents and this sort of thing. I mean, like he didn't have much to say on that either. But what are we looking at here? Yeah,
so another question from Andrew says, what are your lawyers telling you right now? Do they even want you to be here? And audience laughs. And Sam Bankman-Fried is like, no, they totally don't want me to come here. But I have a duty to talk. Is an interesting.
What is the game here? What is the game? Does this guy think he has like bulletproof armor? Like, has he already purchased his get out of free jail card?
Okay, so do you think that this is an accidental slip up by SBF, or do you think that this is a calculated move by him?
I mean, I would have thought that the golly shucks thing, it felt very like accidental, and the child getting called into the principal's office, right? It feels very much like that. It gives off that vibe. But I think given Sam's history of masking his appearance and being very cold and calculating about his publicity, I could definitely take the argument. Maybe I would lean to the argument that this is also part of his plan, that this is also very much calculated. And so this is also part of an apology tour.
Yeah.
And he's using this kind of childish, I was too young, got caught up in things.
I'm learning my lesson. I'm sorry.
Yeah. But that can't work, right?
No, absolutely. No, because
he stole $16 billion.
Because he stole $16 billion.
Okay.
I don't care how old you are. Just a few more parts of this interview. He was asked about where he got the money from all the political donations. And Sam Bankman-Fried said profits, his own personal profits from trades. Okay, interesting. We'll go on to the next one. When he asked about why he made so many donations to media, he says, I wanted to support good journalism. Okay, journalism. Thank you for supporting good journalism, Sam. Okay. And basically the summary of what Sam Bankman-Fried said and what he is trying to get across, this whole like tour of interviews, and this is just the first interview, by the way, he is trying to say that he is sorry because he failed to manage risk. He did not steal $16 billion. He failed to manage risk.
Not theft. It was a mistake. We just had poor risk management processes.
Poor risk management. Yeah.
Okay.
That
was the first of two, right? The second interview, which I actually haven't listened to yet, David, was on Good Morning America this morning. I mean, he's doing the full apology tour in mainstream media. What's this?
Not going on crypto media, that's for sure. So this is a clip out of the Good Morning America interview, which we're going to play, which I think sums up a little bit of everything. You ready to play it?
Yeah.
One of the reasons FTX went bankrupt is because FTX deposits were used to pay Alameda's creditors. Carolyn Ellison said you knew about that. Is that true?
Best I can tell, Alameda did have a big position open on FTX. That position, I think, was very over collateralized a year ago. There was a total market collapse, and specifically a large correlated collapse in its assets, over the last month, and to some extent over the last year, that threatened that position quite a bit. And I think that's, as best I understand, a lot of what happened there.
I am no cryptocurrency expert. I'm no finance expert, but I don't think you answered my question. I was asking, did you know that FTX deposits were used to pay off Alameda creditors?
I don't know of FTX deposits being used to pay off Alameda creditors. Are you... Which creditors are you referring to?
Carolyn Ellison said that you all knew that these funds were put into Alameda. They were the funds owned by your depositors.
So I can't speak for who knew what. A lot of the customers on FTX did have, borrows either, in dollars or Bitcoin or euros.
But as you know, the FTX terms of service tell the people who signed up, none of the digital assets in your account are the property of or shall be or may be loaned to FTX trading. But you're saying that happened.
My understanding is a few things happen. The first is there is a margin trading facility on FTX by which users can lend out funds, by which other users borrow funds. And so there are explicit cases where there is, margin extended, where there is borrow lending.
If Alameda is borrowing the money that belongs to FTX depositors, that's a bright red line, isn't it?
There are a lot of cases where that's actually explicitly part of the programs and that are
but
happening.
Not here. Here it says that the digital assets may not be loaned to FTX trading. They can't be loaned out.
There existed a borrow lending facility on FTX. And I think that's probably covered, I don't remember exactly where, but somewhere else in the terms of service.
But they'd have to approve of that. They're saying they didn't approve of it here. They're saying you approved of it.
If you rewind to the beginning of FTX, where some customers were I think in line with sort of existing relationships that they've had, at least in some cases, wiring money straight to Alameda Research in order to trade on FTX.
So you do know, and you did know, that FTX deposits were being funneled to Alameda.
So I was vaguely aware that that was how some wires were being sent in the first place.
Didn't that set off alarm bells in your head?
So there were a lot of people who were involved in that process. And look, I really deeply wish that I had taken a lot more responsibility for understanding what the details were of what was going on there. I knew that legal was involved. I knew that other groups at the company were involved, that there were agreements drafted up.
But you're ultimately responsible.
And ultimately, absolutely, I should have been on top of this, and I feel really, really bad and regretful that I wasn't. And a lot of people got hurt, and that's on me.
Here's what Mark Cuban has to say about that.
Yep.
He said, if I were him, I'd be afraid of going to jail for a long time.
At the end of the day, it's not my call what happens, and the world will judge me as it will.
Are you worried about going to jail?
There are a lot of things that are worrying me right now. And, as best as possible, I'm trying to focus on what I can do going forward to be helpful and, let whatever, regulatory and legal processes are happening play out as they will.
I do want to move on, but just finally on
Yep.
this. This is really a yes or no question.
Yep.
Carolyn Ellison says you knew that FTX funds were being funneled to Alameda. Did you know that?
I knew that there is an open margin position there and that involved
I know, but that's not what I'm
borrow.
asking. If she's in court and you're in court and she's under oath and you're under
Yep.
oath and you're asked, did you know that these funds were being funneled to Alameda, what is your answer?
I did not know that there is any improper use of customer funds.
My God, David, that pause at the end, just this long pause.
Remember when we had our interview with him and Eric Voorhees, and Eric Voorhees asked him the Aave question and he had to repeat the question?
Yes.
He has to think about what the hell to say.
Okay, but so first of all, good job from these clips. I haven't watched the full interview, but George Stephanopoulos does a good job asking him the same question multiple times.
Yes.
And I think this is what a good journalist does.
Yeah.
But what is Sam thinking? This has a different flavor than kind of the childish kid in the principal's office. This has the flavor of somebody who's I guess on the stand, and there's a prosecutor asking questions. And this person has no idea what they're going to say, has not prepared at all, has not rehearsed. I can't, this is why it's also hard for me to believe that this is all it just feels so amateur hour, David. It's hard for me to believe that this is all kind of contrived from this mastermind of PR who knows how to get out of this. Like, I can't believe anybody sitting watching this would come away from this thinking, yeah, it's like Sam's innocent. He didn't mean to. It's just poor risk management gone wrong. Like, this has to be just him failing on the apology tour. This is just like an embarrassing moment, isn't it?
You would hope so. Other people have tweeted out that they totally believe him, which we will get there. So we'll go to some of the reactions on Twitter to get people's reactions to this interview. Lefteris tweets out, a man stole $10 billion. FTX just got interviewed and portrayed almost as a victim and got applause at the end, still free and fine. Aaron Schwartz, who downloaded academic journals to share with the world, got $1 million in fines and 35 years in prison. This will lead him to take his own life. Okay, so Lefteris not taking any shit, saying that this interview was a bunch of BS. Bill Ackman. Who is Bill Ackman? Bill Ackman is an American billionaire investor and a hedge fund manager, founder and CEO of Pershing Square Capital Management. He tweets out, call me crazy, but I think SBF is telling the truth. And SBF replies on Twitter, I deeply appreciate that. I messed up. I'm going to do everything I can to make it right, even though I knew it might never be enough. To which I replied, WTF is going on?
Well, you can't, I'm sorry, your way out of this, can you?
Mike Dudas, who tweets out, call me crazy, but I think SBF is a pathological liar.
Two contrasting points.
Yeah,
Bill
those
Ackman,
are different. Yeah.
Yeah, says he's telling the truth. Mike Dudas says he's a pathological liar. What else we got?
Mike Novogratz says, it was delusional. Let's be really clear. Sam was delusional about what happened and his culpability in it. He needs to be prosecuted. He will spend time in jail. And it wasn't just Sam. You don't pull this off with one person. Really good point. I think we haven't emphasized that point enough. Other people also need to go to jail, not just Sam. And then here is the point that I think really drives this home. This is from Nick Carter. Sam isn't behaving like a renegade who is ignoring the advice of his lawyers. He is behaving like he has a world-class crisis management firm and legal team constructing a very specific and deliberate public narrative. I think that is my take as well.
How? So Nick thinks that he's really playing 4D chess here.
Yes.
But it looks like he is just playing checkers.
Yes.
Just doing a poor job.
And that is
another rules.
Right. That is the take, is like he's actually playing 4D chess. But when you look at him, you're like, oh, this guy, he's like, he's sorry.
Is that the point? To
up.
garner the sympathy?
I think so.
But how does that work in a court of law where you have prosecutors and facts?
I think they are working the court of public opinion.
Why does that matter?
That's
He's not running for a political office.
I think it matters. I think it matters.
We'll see how this pays off for him. What's this take from Balaji?
This is Balaji saying, jurisdiction isn't why SBF is getting kid gloves. Remember, the U.S. got a satellite state to throw Alexei Pertsev in jail without charges for protecting privacy, which happened in 2 days. So they'd lean on the Bahamas if they wanted to. They just don't want to. Here's, I think, Ryan, what could be the most egregious headline I have ever seen about this whole debacle out of Bloomberg. Sam Bankman-Fried fooled a lot of people, but not SE Chairman Gary Gensler, whose warnings about risk and lack of regulation were well-founded. Absolutely F off.
It's coming out of Bloomberg, all right? Was this written by Gensler? It's like Gensler's pseudonym, Max Chafkin.
Oh my God.
Incredible.
Gary Gensler called FTX is the worst headline he was sitting in a room. He had meetings with FTX executives. It's infuriating, dude.
That is the worst opinion. I don't know whether this is SBF's incompetence or if he really is playing 4D chess, but I know that Gary Gensler was not the one that was to be listened to in this fiasco. All right, so this is turning into a movie series already, a mini series on Amazon. Directors are bringing the FTX story. I don't know if that'll bring any truth, uncover any more. Also, I think we have to get to kind of our second story. Well, SBF is hitting the news circuit, going on Good Morning America, giving these interviews. More of the contagion is being felt. Of course, we know BlockFi was in a bad state when it paused withdrawals after the collapse of FTX. They have now announced and filed papers for Chapter 11 bankruptcy. What this means, David, is if you have funds in BlockFi, unfortunately, you're not likely to get them out anytime soon. You'll have to go through the legal process. It'll be sort of a Celsius style of thing. And this is a shame. I mean, we were just talking to Sagar and Jetty from Breaking Point's podcast. By the way, that episode's coming out on Monday. He
Great
had
episode.
funds in BlockFi.
Yeah.
Right? This is sort of somebody who's crypto adjacent, but supportive of the industry. And he had some funds in BlockFi and was affected by this. A lot of people affected by this. You know what's crazy here too, David, is if you recall, of course, BlockFi had gotten in dire straits during Three Arrows Capital and the Terra collapse. Then FTX came, bailed them out. This was their lifeline. David, do
Good
you know
guy
what that,
Sam comes again.
Yeah, do you know what that bailout was based on? The FTX bailout?
What do you mean based on?
Okay, it was like collateralized by Robinhood shares. Right? So
The BlockFi bailout was collateralized by Robinhood shares. Walk me through what that means.
I think this tweet walks you through it. BlockFi is a creditor to FTX that lent to Alameda, that lent to Emergent, which is a shell company owned by SBF, that bought Robinhood shares that were pledged as collateral to a guarantee to BlockFi to loan to FTX that was used to bail out BlockFi itself.
I don't understand.
Exactly.
I don't understand what just happened. BlockFi is a creditor to FTX.
Yeah.
Okay, so BlockFi is a creditor to FTX. FTX borrowed from BlockFi, and then FTX lent that money to Alameda. Alameda lent that money to
BlockFi. So BlockFi borrowed from FTX, who lent to Alameda, that lent to this shell company called Emergent.
Okay.
That was actually owned by SBF.
Okay, so Emergent is a shell company by SBF, which is the shell company that bought Robinhood shares.
This Emergent company bought Robinhood shares that were pledged as collateral to guarantee BlockFi the loan to FTX that was used to bail out BlockFi itself.
Wait, okay. Pledged
Robinhood
as
was the collateral. Yes.
Pledged as collateral to BlockFi
to guarantee to BlockFi the loan to FTX.
Wait, who
So
got the
BlockFi
loan?
got bailed out by BlockFi.
BlockFi gave the loan to FTX, and FTX used that loan money to bail out BlockFi, and that loan was collateralized by Robinhood shares,
Yes, that were
which
also
owns by a shell company, which
that was owned
got
by
that
SBF.
money from Alameda Research, which got that money from FTX. What the shit is this, dude? What?
Look, if you don't laugh, you cry. And that's what BlockFi's bailout was based on. That's what the hope of depositors was based on since May, June of this year.
Do you think if you can just create a fucking mesh network of interconnected money to the point where all the money disappears because it's out of a smoke of confusion, you can just mint more money that way?
I don't know, David. What do you
happened.
think? I mean, absolutely. And look, this is heartbreaking for a lot of people who are in BlockFi depositors. I mean, we're really learning some tough lessons in this chapter of crypto for sure. But
This tweet is insane. I want to read
this.
this tweet again. BlockFi is a creditor to FTX that lent to Alameda, that lent to Emergent, which was a shell company owned by SBF that bought Robinhood shares, which were pledged as collateral to guarantee the BlockFi loan to FTX that was used to bail out BlockFi itself. What the? Okay, so this is the pattern that we saw throughout Sam Bankman-Fried and throughout FTX Empire. We also saw the same pattern with Three Arrows Capital, maxing out lines of credit, using anything as collateral as possible, borrow everything that you can, create as much like interdependent connections as possible, and then like you create a super fragile system, and then like CZ tweets, and then the thing falls apart.
Yeah. Put it in the pawn everything. Everything's pawned. Any collateral we have, Robinhood shares, that the collateral that backs to buy BlockFi. Can you believe this?
And remember what I said was the whole summary of what SBF was saying. We forgot to manage risk.
No, you did. Yeah, you forgot a lot.
That was the only thing you did.
You maxed out your credit card.
You maxed out your risk, bro.
You set your house on fire. You stole from everyone in your neighborhood. I don't know, man. You did a lot more than just not manage risk. All right.
This is insane.
That's FTX. All right. This week,
Okay.
maybe things get quieter from here. I don't know what Sam's next move is going to be. I'm kind of curious.
Jail. It's jail. It's got to be jail.
We did an episode on this earlier in the week. If you guys want to catch that, on the question we posed was, why is Sam Bankman-Fried not in jail? I don't think we got a satisfying answer at the end of that episode.
We did get an answer. We just weren't happy about it. The answer is that he paid the Democrats and the Republicans and the New York Times and all these journalists and all these nonprofits. And now no one wants him to go to jail because if he goes to jail, they'll have to give back all of that money as clawbacks. That's the answer as to why he's not in jail.
My hope is that it's just too soon. That the justice system
okay, Ryan. That's what I was thinking until I saw.
Then why is he doing this with the interview tour?
Yes, I was thinking, okay, it's just too soon. Like people get confused by crypto. They're waiting for the dust to settle. We'll charge him. He'll go to jail. Now with this speaking tour, I have capitulated. It's like, oh, he might get away with this.
Like he's talking as if he's got some sort of bulletproof armor, some sort of shield over him. Like he's got the master.
And some people are letting him do that.
Okay. We'll see how this emerges. I for one would be happy not to have to think about him for at least a day.
Don't hold your breath.
All right, let's talk about MetaMask privacy stuff. Okay, what is going on in this world? That was an issue last week as well. Tell us.
Yeah. Okay. So I'm gonna speed run through this. So Infura and MetaMask got into a bunch of public heat on Twitter because it was reported that MetaMask was reporting users' IP addresses and mapping them to their Ethereum wallets. And the reason why it was MetaMask was it's because actually it's Infura, because when you make a transaction through MetaMask, it routes it through an Infura node and an Infura broadcast.
But that's the
doesn't
default.
have to, but that's the default. And then people, okay, well, Infura is the one that's mapping IP addresses to MetaMask users. What the hell? Why are you guys doing this? And then both Joseph Lubin puts out a tweet thread providing a bunch of clarity on this. But I actually felt that it was Dan Finley's tweet threads that were the most helpful. So if you want to get a long form answer, which we don't have time for, there is Joe Lubin's tweet thread, 21 tweets that explains it. And basically the TLDR of this is that no, Infura is actually doing the same thing that everyone else is doing, which is the minimum amount of user data retention possible. The only reason why Infura and MetaMask are taking flack for this is that they are also the most transparent about what's going on. To say this more simply, it's not Infura that's capturing user data. The internet is just this place that captures user data. There's just like we leak data all over the place. This is what David Trom was talking about, which is why he made this whole thing called traffic analysis. Traffic analysis can map your IP address to your Ethereum wallet. It's not a result of Infura. It's just the fact that Infura is a part of the internet, and then I am regurgitating and restating what Dan Finley says. Dan Finley is one of my personal heroes in this space, so I trust him. So this is me bestowing trust upon Dan Finley. I think he's a great guy. I've done multiple podcasts with him, and this is what he says, and I totally believe him. So maybe you just have to fact check me, but I think that this is kind of a nothing burger. And I actually think, again, to double down on the point, the reason why people are upset at MetaMask and Infura is because they are actually the ones that are the most transparent about what is going on. And so that transparency allowed for this rage to be like surfaced. So this was kind of spicy. So this was my crypto wallet tweeting out, which is a MetaMask competitor, saying, angry that MetaMask is going to start collecting even more of your information, now your IP addresses. We have never and will never collect identifiable information for our users. So use our wallet. And then Taylor Monahan, now MetaMask, responds, except you do, you have, and you will always, because there's no way not to, don't respect your users like that. You send every user's various on-chain addresses, IP addresses, info to Mu API, which is themselves, blockchain.info, Moonbeam Network, on and on. The only difference is that you blatantly lie about it. Ooh, spicy. And then Dan Finley, who retweets this tweet, if you want to hit the back button, Ryan, says, other wallets are opportunistically acting like their centralized web infrastructure magically isn't. It is. If they have any anti-denial of service layer, and who can survive in crypto without one, they're storing data too. So I think the TLDR is like, this is the meta. Infura's not doing anything that isn't also done by anyone else, and it's also not their choice.
My takeaway is just float around the internet using a VPN.
Sure.
And this is less of a problem for you. You have to protect these things at the base layer because assume your data is leaking everywhere. If you want to get super hardcore, use Tor. That's what we got to do right now. Mm-hmm. David, what do we got coming up next?
Coming up next, we got some really good stuff, some really, really good stuff, which I'm excited to talk about because that was some bad stuff. The Ethereum ecosystem scores some huge wins, which we're going to talk about. There's some solid NFT activity as well going around. Okay. And Bankless, that's us, Ryan, acquires a company that helped put $150 million into people's wallets. Wow.
The headline.
Good
That
for
sounds
them.
bullish.
Good for
Yeah.
them. We're going to talk
Good
about
job,
that
Bankless.
and more right after we talk to some of these fantastic sponsors to make you more bankless. The Brave Wallet is your secure multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3 ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started. The Layer 2 era is upon us. Ethereum's Layer 2 ecosystem is growing every day, and we need Layer 2 bridges to be fast and efficient in order to live a Layer 2 life. Across is the fastest, cheapest, and most secure cross-chain bridge. With Across, you don't have to worry about high fees or long wait times. Assets are bridged and available for use almost instantaneously. Across's bridges are powered by UMA's optimistic oracle to securely transfer tokens between Layer 2s and Ethereum. Across is critical ecosystem infrastructure, and Across V2 has just launched. Their new version focuses on higher capital efficiency, Layer 2 to Layer 2 transfers, and a brand new chain with Polygon, all while prioritizing high security and low fees. You can be a part of Across's story by joining their Discord and using Across for all of your Layer 2 transferring needs. So go to across.to to quickly and securely bridge your assets between Ethereum, Optimism, Polygon, Arbitrum, or Boba networks.
Guys, we have some exciting news. David alluded to it before the break, but Bankless has just acquired a $150 million tool for you, for the Bankless community.
We did?
That doesn't mean we paid $150 million for this, all right, David? Let's just be clear on that. This tool has created $150 million worth of value for Bankless users, people that are on the Bankless journey in DeFi, primarily through airdrops and other claimable activities. The tool is called Earnifi. You may have heard us talk about Earnifi on the podcast before, I think in the form of sponsorship. This is a tool we've used for a while, and we liked it so much, we wanted to bring it into the Bankless family and give it more exposure, give it more support, and scale it up. So a few reasons we did this. I can get into those, but give me your reactions first, David. Why don't you tell me why we did this? Why did we do this?
Well, once upon a time, people might be able to infer I'm a little bit of a disorganized individual. So I had like 10, 12, 15 active Ethereum wallets during airdrop season. And without Earnifi, I actually would have missed like 3 or 4 Uniswap airdrops. So
yeah, I remember this.
Yeah, so this is how the story started. So I was using Earnifi to plug in all of my addresses that I didn't want to have to load up through MetaMask, restore old private keys. I just had like an Excel sheet of my Ethereum addresses, and one by one I plopped them into Earnifi, and I found like tens of thousands of dollars that I had not previously claimed, that I thought that I had totally claimed.
The couch cushions.
Yeah, under the couch cushions.
The Uni drop specifically.
Yeah, but some other ones as well. I also discovered that I had missed airdrops that had expired, sad face, and which had also let me know. And then it also let me know that I had pudgy penguin, little penguins available to mint. So like the amount of money I got from this thing was a lot. It was insane.
Yeah, it was funny. I remember watching you do this and like discovering the tool. This is like in April, and it was just like, this is your tweet. LMAO just found another wallet with the Uniswap airdrop.
That is 2 years. 2 years after the Uniswap airdrop.
You were just hitting me with these like, oh, found another 400 uni. And this is like worth thousands of dollars each time, right?
Yeah.
And so I really, at the time, talked to you and I was like, who built this tool? It's fantastic. I started using it too. And I was like, wow, all of these addresses that I've used, I have airdrops, unearned airdrops, unclaimed tokens that I can be. So I reached out to the Earnifi account and said, hey, thanks for helping David find all of his tokens. You guys up for a conversation about how we can collaborate? I was just thinking, hey, we want to give them some more exposure on Bankless. And that's when we met the founder of Earnifi. His name is Dawson. Botsford. He is a Bankless listener from way back, apparently. And he's a hacker. He's a developer. Some skills that David and I do not have. Turns out he has been hacking at hackathons over the last couple of years. And he's won a whole bunch of them that he's participated in. These are like crypto-centric, ETH-centric hackathons. He even has a podcast, David, specifically for DeFi builders. So we started talking to Dawson, and we talked some more. He's got the original Bankless t-shirts.
Before we were even talking to him, he was wearing Bankless stuff.
I know. Anyway, talks went so well, we decided to bring Dawson on as a co-founder of this new entity we're calling Bankless Labs. And the purpose of Bankless Labs is to build tools, build equipment. All right. So if you think of Bankless Media, the thing that we're doing right now, the theme for us has been educated. The theme's been education. And like our goal has been to bring crypto to 1 billion users. And we've done that through podcasts, through newsletter, through all sorts of media that we're embarking. And we're still going to do that. But it's not, the Bankless journey doesn't end with education. It also stretches into equipment, tools. So we want to educate and we want to equip. And in order to equip, we need to start building some of these tools for the Bankless journey. And Earnifi, to me, David, is like a top recommended tool. Like if you're starting your crypto journey, the thing you need to do is get on Bankless, get on some other great podcast education material. That's the education part, right? Then you need some tools. You need MetaMask. You need a Ledger wallet. Yeah. You also need to plug in your addresses in Earnifi so you don't miss airdrop opportunities or other notification events that will happen on chain, because these things will keep happening. And if you don't have this plugged in, you got to do all the work manually, and that's no fun. So we brought Dawson in. We brought Earnifi in. We're giving it some more exposure. We're scaling it up. We're building out the roadmap. And I could not be more excited to bring tools into the Bankless journey as well.
Yeah, this is there's a lot of potential here, which, I mean, I'll refrain from turning this into a massive ad for Earnifi, although you should put your Ethereum address into Earnifi, because it's an email notification service. You put your address in. If a new airdrop, new event happens that you can claim, it will email you. So the whole thing is that it saves you time. Go click my meme, because I think my meme's really good.
Oh, which one? Is this one yours?
Yes, yeah, that one. Yeah.
What is my purpose?
So this is Rick and Morty. What is my purpose meme? What is my purpose? You find me money. Like, that's the pitch. You find users money.
You always have this weird relationship with robots, David, and I'm not always comfortable with. Okay, they're not just built to serve you. All right, they could be your friends too. This is my meme, by the way, that got forced to the bottom of the post. This little robot friend.
I don't know what that meme is.
It's great. Anyway, guys, if you want to join the journey with us, go try out Earnifi. Put some ETH addresses in. It's free, so you want to scale that up, cover more addresses, and get some of the premium airdrops. So check that out. And we're releasing a whole bunch more in the coming weeks. Super excited to do that. David, some other stuff is getting released during this bear market. What is this from Casa? I would classify this as an Ethereum win, maybe?
Yeah.
Give us some context here.
There's 3 big wins that we're about to go through, which are infrastructure that has previously been specific to other ecosystems, which are now opening the doors to Ethereum. So this is Casa, which is a key management system. It's like a multi-sig system on training wheels. So think like Gnosis, but with humans on the other end to, kind of white glove your support. There's different tiers that you can access. There's, of course, free. There's an iPhone app. There's like a cheap $120 a year one. There's like a more expensive ones. But it's various just like help to self-custody your assets in a highly secure way. So it's like white glove Fort Knox services. Anyways, Casa has always been very highly regarded in the Bitcoin ecosystem as just really, really good product. And now Ethereum support is coming soon. So that's very exciting for the Ethereum world. This is a company that's been around for a very long time, very reputable. People love it. And now we get all of their products and services for Ethereum, which is amazing.
That's a big step for them. I know, Jameson Lopp has been a big Bitcoin advocate and pretty critical of Ethereum. And he, I believe, is a co-founder behind this as well.
Yeah. And that is just the first. So we're off to the second. Phantom Wallet out of Solana is now coming to Ethereum and Polygon. I remember, like, a lot of people, when they say, like, what do you like so much about Solana? They say, like, the transaction times and Phantom Wallet. Phantom Wallet is great. Well, Phantom Wallet's now also coming to Ethereum and Polygon at the same time. So that is now a new wallet inside the Ethereum ecosystem to add to the competition sphere, which is very much needed. And also, Trader Joe out of Avalanche. Avalanche's biggest DEX. Yeah, this is like the Uniswap of Avalanche, is now deploying on Arbitrum. So you know the whole idea, Ryan, that we had during the Alt Layer 1 summer, that all Alt Layer 1s will just become rollups on Ethereum?
Yes, I remember this.
That might not play out, but all layer 1 applications might instead deploy on layer 2s on Ethereum, because that is what we are seeing here. So I'm sure Trader Joe on Avalanche is not going anywhere, but they are also definitely coming to Arbitrum. So congratulations to the Trader Joe team for making the break into the Ethereum ecosystem. Yeah, okay, so on to new subjects. We were talking about Ethereum censorship in the last week, earlier this week. What's it called? Flashbots open sourced their block building services, their block building software, so many more people can build blocks. And that has recently turned over the peak of OFAC compliant blocks that have been built. Even though 79% of Ethereum blocks have previously been OFAC compliant, that doesn't mean that Tornado Cash is censored. You can always still get a Tornado Cash transaction into Ethereum. But if you're a United States citizen, you go to jail. Flashbots open source their block building, and we have seen a downtrend in the percentage of OFAC compliant blocks. Cool. Hazu responds to this tweet. This tweet, which is just a retweet of what we were just showing, plus more neutral relayers coming online, which is an announcement out of Gnosis DAO and Ultrasound Money, plus the adoption of minimum bid, plus existing relays accepting submissions from external builders, should make this chart look quite different over time. And this, Ryan, summarizes why I've never really been concerned about this whole, like, Ethereum's totally censored. Like, it's all the amount of solutions that we had that were in the pipeline and in the near term as well, just like were massive. So
I get so much fun about this.
So
like,
much
people
fun.
actually think that Ethereum is censoring completely. You can't get a Tornado Cash transaction through on the Ethereum network, which is completely untrue. And I'm just like, I just have stopped responding to these tweets because, like, you just let time play out and knowledge will diffuse. What's happening with Aave though? Are they pausing some markets in the DeFi side?
Yeah, so remember last week when we talked about the guy that did a short position on Curve, left Aave with like $1.8 million of bad debt, and then Gauntlet released that post recommending that Aave turn off trading on, or turn off liquidity.
Just pause them?
Pause, turn them off, temporarily freezing the following market. So a bunch of tokens are no longer acceptable collateral on Aave. YFI, CRV, ZRX, Mana, 1inch, BAT, Ample, RAI, LUSD, Staked Sushi, DPI, Maker, MKR. Actually, some pretty big
Why are all
players.
these things frozen?
They're just not liquid enough. We're at the bottom. When you're at the bottom of a bear market, you are also at all-time lows in liquidity.
It's just a risk parameter that Aave governance
parameter.
tweaks up and down, so they're freezing it now.
And I'm sure they'll turn them back on as they become more adopted, more liquid, et cetera, et cetera.
Remind people that's designed in the protocol. It is supposed to function that way, and I'm glad governance is being proactive about that. David, let's talk about NFT stuff, some collectibles. First, got to talk about the Bankless Collectibles.
God, we are just shipping some cool stuff, man.
Our second collectible is coming out tomorrow. The first was the SBF versus Voorhees debate. David, do you want to tease what the newest Bankless collectible is? Which podcast
Episode?
is this?
Okay, so it is the. Let me see. Well, I know you know the answer, so I'll just tease this for the listener. There are two foundational technologies that kickstarted the Renaissance. Oh, fuck, that's in the title.
You broke it.
It's a crypto Renaissance episode.
David was trying to say the printing press and double entry bookkeeping.
I should have just said that. Wow.
That could have been the riddle. Anyway, you know what it is. Josh Rosenthal, the episode. We are having a Twitter Spaces with Josh Rosenthal. We're talking about the episode as we're releasing this collectible NFT, having that tomorrow. So there's also a secondary market where you can buy and sell Bankless collectibles that we've spun up too. That's kind of cool. Doing this NFT podcast, NFT experiment. It's going pretty well. People
First ever podcast NFTs.
And this will be the second ever.
Pretty cool.
We got two now. Yeah. David, speaking of NFTs, Cockpunch.
Cockpunch, my favorite NFT.
Well, there's a date for this. December 7th now. We had the podcast with Tim Ferriss earlier this week. And this is what a rooster looks like. A cock.
Is that what you thought that they'd look like, Ryan?
Cockpunch looks like. Ish.
Yeah,
it's more 3D
right.
than I thought, but yeah, that's about it.
Yeah, that's all right.
Yeah, so that's cool. If you're
So
curious about
that mint is happening in 7 days. 7 days
now. All right. OpenSea says NFT creators earned $1 billion in royalties. That's pretty big, man. That's a
great.
pretty big economy for the creators. And that was over the last year, $1 billion in royalties. That's just royalties.
God, NFT people got it so easy. Remember how long it took us to get $1 billion locked in DeFi? It took us like 2 years, dude.
Yeah, but NFT people are feeling pretty down bad, even worse than DeFi, I think. Maybe not.
I don't know. We're both pretty wrecked.
All right. Moving on. Pudgy Penguins. What are they doing this week?
Yeah, so Pudgy Penguins had a sale in Sotheby's, which sold out. So 10 Pudgy Penguins got sold in the Sotheby's auction for something like $129,000, including the Pudgy Penguin that is Cole's. Cole, the founder, creator of Pudgy Penguin, his NFT, his Pudgy Penguin, his famous one, sold, along with a bunch of other rares. I don't know. I don't know.
Don't test my NFT knowledge. I'm not with the Penguins. I'm not up on it. But Telegram, I do remember this. Telegram had a whole network, a smart contract network that they were launching called the Telegram Network. I believe it's TON was the token symbol.
Telegram Open Network or something like that.
They raised like $1 billion for this. This is back from my circa 2017, 2018 days. I remember this being, wasn't quite an ICO, but it was like a...
It's definitely an ICO. It was definitely an ICO.
Okay, it was an ICO? Okay, it was an ICO. It's part of the token mania. Anyway, Telegram back doing some crypto stuff. Their founder, CEO Durov, is that how you say his name?
I have no idea.
Okay. He is saying that they are building crypto wallets and its centralized exchange to prevent things like FTX from happening again. What is this, David? Is this just another, like, I don't know, pump kind of thing? I mean, nothing really came of the Telegram Open Network back in 2018. Is this more of the same?
So when I read this article, and the details are more than just the headline. When I read this article, I was like, damn, what year is it? Turns out that Telegram sold $50 million in usernames using its own chain-based auction platform Fragment. So apparently the TON blockchain is up and running. They're planning on putting a DEX on it, and they're planning on allowing Telegram to be a wallet as well. And it's also, Ryan, not available to citizens in the United States.
Wait, what?
Yep.
That's annoying.
I don't ask too many questions. I don't know, dude.
Okay. All right. Well, I mean, think of this as an app chain, I guess, that is somewhat censored if you live in the US. Cool. All right. Let's talk about Fidelity. This is actually huge news that went under the radar, but Fidelity Crypto is a go. So remember, Fidelity is a $4.5 trillion firm, asset management. They just launched retail crypto trading. Yeah, trillion with a T. Retail crypto trading. This is Fidelity. And they're doing it now when the rest of the world hates crypto.
Right.
Why is this a big deal, David?
Well, just because of that $4.5 trillion amount, but it's one of the big signs of just like the correct amount of adoption, the best kind of adoption that you could hope for. Fidelity, they've been pro crypto for a very long time, mostly pro Bitcoin, recently pro Ethereum, but now they're also pro retail, which we love. So nice job, crypto. Nice job, Fidelity Crypto.
I've really liked their strategy. It's kind of like the tortoise type strategy. They're slow and steady, and they do things very methodically, very carefully, and very
not
very
by the whims of the market. Yeah,
but they're there. I mean, they're an old institution that's been at the forefront at some level, and certainly leading their peers. Really cool to see. Also, Binance getting into the proof of reserve game a little bit more. What's this, David?
Yeah, Binance released their proof of reserves. I asked Nick Carter, hey, Nick Carter, who's like the king of proof of reserves, can you give me a comment as to how good this system is? He told me that he is writing an article about it. But Binance is not the only proof of reserve system that got announced. Oh, by the way, the Binance proof of reserve system claims that they have 582,000 Bitcoin in reserve with only a liability set of 575,000, giving Binance a margin of over 6,000 Bitcoins. Cool. BitMEX produced a proof of liability system, meaning that if you are a user of BitMEX and you've deposited Bitcoin, you can get a cryptographic assurance that your deposit is accounted for in the overall liability of the system, which means that all you have to do is cross-reference how much liabilities they have, how much Bitcoins they have. So cool.
I like this. I like this market pressure. This is kind of like centralized exchange are like, oh crap, we better put our proof of reserves solution in place right now and proof of liabilities. Meanwhile, centralized exchanges are also the ones still with money anyway, are buying things. This is Binance launching a $1 billion raise for a crypto recovery fund to buy troubled assets. There's going to be a lot of troubled assets. We get through this this bear market and this crypto winter, and Binance wants to snap up a whole bunch of them. $1 billion to dole out, it looks like.
Well, yeah, so a bunch of startups, a bunch of funds, it's just everything lost money in FTX, right? And so Binance says, hey, we've got $1 billion. If you're in trouble, we'll strike a deal with you. That's what that is.
It's not just Binance. It's Jump Crypto's in here, Polygon Ventures, Aptos Labs. Interesting group of collaborators.
Yeah, it's like a feeding frenzy of fire sale stuff. Some sad news over at Kraken. They are laying off about 30% of their staff, about 1,100 people. Wow, that is a big staff. Because of market conditions. So that's sad and unfortunate. But there's also some fantastic severance. So they're also paying 16 weeks of base pay, performance bonuses as determined by managers, and also 4 months of healthcare benefits. So doing it responsibly. So
that's the way it should be done. Imagine FTX employees right now.
Yeah,
they're not getting any of these things.
They don't have any healthcare. Yeah.
On the releases side, Uniswap just released a big NFT aggregator.
No, so actually this got released a while ago. Now it's finally live. So we actually did a State of the Nation with Hayden forever ago about this. I guess it took longer to actually.
Were you talking about Genie?
Genie, yeah. So
they purchased Genie, right?
Purchased Genie, and now NFTs are live on Uniswap, the exchange. So you can trade NFTs across marketplaces. Also, if you are a historical Genie user, you are airdropped $5 million. I bet you should probably put in your Ethereum address into Earnifi to check that if you are or not.
Yeah, absolutely. Very cool. I think that was
this is a great meme, dude.
Okay, what's this meme?
This is the Bane versus I don't know with the guy in the pink what that is. It's just like a face off between two entities who are doing the same pose, and Bane's bear market, and this guy in like this pink spandex suit is like, yeah, but NFTs on Uniswap.
Not going to reverse the bear market. Sorry guys, it's still pretty cool. Building through the bear. Stripe also enabled fiat to crypto on-ramp, and Stripe is absolutely massive, just like an API that powers so many things. Actually powers the Bankless membership on Substack as well. And so this is a big deal. Allows customers to buy crypto, convert directly from crypto to fiat, and make payments through Stripe.
Yeah, we would have had we had the conversations with the founder of Stripe to come on Bankless to talk about this, but then FTX happened, so we had to reschedule him. Sad.
Yeah, he'll be on soon. Ledger doing debit cards. Reminder, Ledger is a sponsor of the Bankless podcast, but we are talking about this because they have rolled out a Crypto Life debit card across the UK and Europe. What is this thing going to be?
It pretty much explains itself. You got a debit card. It's got crypto in the back. As you swipe your debit card, you spend your crypto that is loaded up in your Ledger Crypto Life.
You have to move.
You have to load
from
it up,
your
yes.
Ledger wallet to this temporary place in order to kind of load your debit card.
You do. You do have to do that. Yeah.
At least you don't have to trust a bank, though. It's very important till the end stage. Well, speaking of Uniswap earlier, they're still hiring, David.
Yeah, because they need to hire NFT people now.
That's right. It's jobs time. All right, Bankless jobs board, bankless.pallet.com. We've got a Uniswap Labs developer relations lead. We've got a Uniswap Labs senior front-end engineer. We've got somebody from Rabbit Hole, business operations and strategy. Dottyland, senior blockchain engineer. Diagram Ventures, MakerDAO needs some people. Oh, look, Earnifi needs some people too.
Oh,
yes.
Weird.
Bankless Labs is hiring full stack engineers and senior backend engineers. Check out all of those jobs at the Bankless job site, bankless.pallet.com/jobs. All right, David, what's coming up next, man?
Coming up next, we got questions from the nation. Just one this week. Also, some hot takes on crypto Twitter. And also, of course, what Ryan and I are bullish on. And I think one of the better memes of the week that we've had in a very long time. So all of this and more coming up right after we talk to some of these fantastic sponsors to help you go bankless. How many total airdrops have you gotten? This last bull market had a ton of them. Did you get them all? Maybe you missed one. So here's what you should do. Go to Earnifi and plug in your Ethereum wallet, and Earnifi will tell you if you have any unclaimed airdrops that you can get. And it also does POAPs and mintable NFTs. Any kind of money that your wallet can claim, Earnifi will tell you about it. And you should probably do it now because some airdrops expire. And if you sign up for Earnifi, they'll email you anytime one of your wallets has a new airdrop for it to make sure that you never lose an airdrop ever again. You can also upgrade to Earnifi Premium to unlock access to airdrops that are beyond the basics and are able to set reminders for more wallets. And for just under $21 a month, it probably pays for itself with just one airdrop. So plug in your wallets at Earnifi and see what you get. That's EARNI.FI. And make sure you never lose another airdrop. If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves, and fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network.
It's questions from the nation time. We've got one question this week. There are a whole bunch, but we had to pick one because we want to talk about something else. But the question was from Time3Dash at Time3Dash on Twitter. Why did you change your name? This is a very funny name referring to Sam Bankman-Fried. And what the question is referring to is the Bankless Twitter account now, rather than saying Bankless, our Twitter account handle, it says Bankmanless. Right?
It was a funny joke.
Sam Bankman-Fried. We did that, I think, like the day all of this stuff came out.
Weeks ago. It's been like this for weeks.
So why did we change our name?
Well, it's a funny joke. Yeah. So like Sam Bankman-Fried stole $10 billion of user deposits. So we changed our Twitter name from Bankless to Bankmanless. I thought that was a funny name. Funny thing to do.
But how long will it be funny? Because it's still Bankmanless on Twitter. And the joke's getting a little bit old, but I think we have a problem.
Yeah, so we can't change it back.
Why?
is the
I don't understand
here.
this. So Elon took over and we switched our name with the blue check mark.
You previously were able to change your name as much as you want, but since like Bankless is a verified account, you can only change your name like once a year or something. I don't know, but like we changed our name and now we can't change it back. So now it's stuck as Bankmanless.
We have emailed support. We have petitioned people. We need to reach out personally. If you know Elon Musk, tell him we would like this change from Bankless.
Actually, we'd like him on the podcast first.
Let's do that first. But also while he's on the podcast, we'll make this request. We'll ask.
So we are now Bankmanless for the foreseeable future.
All right.
It's not that far off. It's fine.
It's fine. Not that bad, but also it's going to be old. Like next year, this is going to be real old.
Next year. God damn it.
All right. I think it's time to shout out some of our heaviest listeners this year. David, I know you're a big Spotify user. So am I.
Oh, big time.
Got your Spotify Wrapped, which summarizes all of your year's listening habits, including podcasts. And we've had some fans that have been fully tapped in during the last year and have some incredible stats to share. First, I want to show we got our Bankless stats back from Spotify. Apparently, you and I recorded 16,092 minutes of new content last year.
That is insane. We are insane people.
That's more than 99% of other creators in the business category. I wonder if it's like 99.
We have to be 9%. In the top 10 of our minutes of content.
That's a lot of content.
It's a lot. Do you know how many days?
Overdoing this?
Do you know? Yes. I don't know. Do you know how many days of content that is, Ryan?
No, I haven't.
That is 11 days of content. That means you and
24-hour days?
24-hour days. That means you and I have been in the recording studio with the studio recording for 11 days.
Dude, this doesn't even count debriefs on the premium podcast.
Oh, yeah. This doesn't count debriefs.
This doesn't count like bonus episodes. Oh, this is even more than that.
Or YouTube only episodes.
11 days? Are you kidding me?
We are insane.
Wow. All right. I don't know what that says about you and I, but let's talk about what it says about the community.
Let's not talk about it. Okay, so we put out a tweet that asked for if you got Bankless in your Spotify Wrapped, tweet at us so we could see how many of you listened to Bankless for how long.
Yes.
So here we go. The fake Shippy coming in at number 1 at 21,000 minutes is Bankless. I don't get how that happened.
Okay, we had 16,000 minutes of recording last year, and Shippy listened to 21,000 minutes. He's probably listening right now.
How
Shippy,
did they do
shout
that?
out, man. That means you were listening to episodes multiple times, at least. Is that what this means?
You got to be. They got to be listening to it as they go to bed or
Shippy,
something.
You have listened to more Bankless than both.
Than we made.
Than we made. What? Get this guy a T-shirt. We got to do something for Shippy. That's huge. That's number one.
Nice job, Shippy. Well done. All right, let's go through the rest of them. Oh no, that was it. Okay, we're not going through all of them. Okay, cool. There were so many. Thank you all to everyone who tweeted at us. So many of you listen to thousands and thousands of minutes. I hope you guys like our voices.
Maybe there's an invitation if you can beat Shippy.
Yeah.
Tweet at us. 21,093 minutes. If you've topped that, let us know and do something special for you guys. Yeah. That's a lot. That's a lot of Bankless in your ears, David.
Yeah,
all right, takes of the week. What do we got for the first one?
We got a tweet out of Zeneca33. I know you like this tweet, Ryan. Why don't you read it?
All right, because you didn't like it. Is that why?
No, I just know you like it. You
Bear market opportunities from Zeneca. Number 1, farm all the airdrops. Number 2, get familiar with the AI tools. Number 3, create content, written, audio, video. Yes, yes, yes. Number 4, learn to code. Number 5, join DAO. Number 6, figure out how to manage a Discord server. Number 7, read about DeFi and layer 2s. I actually liked it because of this last sentence. You ready for it, David?
Yeah.
Wealth is sown in the bear, reaped in the bull. And we say that all the time.
That's very, very metaphorical.
Some things that you can do right now during the bear market to be active. I think
all of the airdrops that I claimed with Earnifi in 2021, I became relevant to those airdrops. I became, what is the word? Those airdrops.
You actually earned them.
I earned them.
So
I
you
got
sowed them during like 2020 and 2020, right?
Yeah.
And then you
like
reaped them
harvest them in 2021 thanks to Earnifi.
There you go. And sponsored by Earnifi.
Sponsored by Earnifi.
This is a Vitalik tweet. I want to actually read this out and get your take on this.
Okay.
So this is Vitalik. The notion of governance rights as a narrative for why a token should be valuable is pathological. You're literally saying, I'm buying X because later on somebody might buy it from me, a bunch of other people, to twist the protocol toward their special interests. This is Vitalik saying governance rights tokens are not very valuable. It's more pathological. It's more kind of a meme. What do you think about this?
I'd like to get Joel Monegro's opinion on this because he was the one that said, yes, the governance of a token is actually the valuable thing. And that's the whole point. As in, if you can govern over something, you can dictate its influence.
You can just vote in cash flows yourself.
What you want, right? So governance is power. Governance, capital, power, these are all the same things. So the notion of governance rights is narrative. I think maybe Vitalik's just kind of being critical of the hand waviness at this. I don't know.
Yeah, I think he's saying governance rights on its own aren't as valuable as some people think that they are. But I don't think that's been the value proposition that DeFi governance tokens have purported. It's more the idea or like the thesis that token holders will vote in cash flows, capital flows to themselves, get a portion of revenue on the Uniswap fee. Now, that hasn't quite materialized yet.
No.
Like Uniswap doesn't have a fee switch on to Uni token holders yet, does it?
Yeah, so Vitalik continues and says, as a regular individual, pay $500 to get a 0.0001% chance to influence the outcome of some votes is just not a good trade. The only people for whom it is a good trade are multimillionaires and hedge funds. Yeah, but isn't that kind of always the bet that like you don't have much say as a smally capitalized individual? And so like governance power or like the value of Apple governance, like as a retail investor, I can't sway Apple governance, but hedge funds can. But that's why the price exists on the secondary market. Anyways, I'm not sure. I'm confused by this Vitalik take.
Yeah, I do think that governance tokens have a lot of problems. We had an episode with Hasu where we've recently talked about this. But yeah, I'm not as pessimistic as Vitalik on these things.
Yeah.
What's Van Spencer saying here?
Van Spencer, 2022, not the year everyone wanted, that's for sure, but probably the year we deserved. For context, Q4 2019 Genesis had about $60 million of loans outstanding. In Q4 of 2021, they had about $50 billion.
This is Genesis, the company.
Genesis, yeah.
60 million to 50 billion in 2 years?
Yes, right, crazy. And then he continues, we are back to effectively zero CeFi credit available in the industry outside of Maple Finance, which is emergent. Ashes to ashes. Basically saying the mania is gone, the credit's gone, we are at the bottom.
Wow.
This is a bottom signal to me. He's not calling the bottom, but I'm calling the bottom on his behalf.
These numbers are pretty astounding. We grew from 60 million in CeFi loans to 50 billion. And that's just Genesis. It's not the entire market. Now we're back at zero. A lot of things have been washed away, certainly in this market. But what are you bullish on in spite of all this, David?
So DC Investor put out a tweet and said, do you think the people that bought Ether at $120 are inconsolably upset that they did not buy at $80? No. Source, me. As in like DC, one of the guys that was buying the dip with us throughout 2018 to 2020. And so I follow up on that tweet and I say, all of my sub $300 buys, Ether buys, which that like Ether bounced between $100 and $300 like 4 times between 2018 and 2020. So I say, all of my sub $300 buys between 2018 and 2020 just blur into that one big dip I bought. And what I am bullish on, Ryan, is that same thing happening all over again between $1,000 and $2,000. I think Ether will bounce between $1,000 and $2,000, perhaps a couple times over the next 12, 18, God forbid, 24 months. But then that period of time will just blur into that one big dip that we all bought as we all stuck through the bear market together.
Before
as
Ether
goes to finally $10,000 and beyond.
So, I mean, this maybe this obsession, I don't think we have an obsession. It's just an interesting number, but like triple digit ETH, right? Whether it does hit triple digits and you buy at 900 or you buy it at 1200, you're not even going to notice if the price of ETH is 10K.
Yeah, Ryan. So just buy it then.
Dude, again, people are going to say, you guys are like permabulls. This sounds crazy. You haven't been saying 10K for a long time. Yes, we have. And we're not wrong. Like, I'm sorry. ETH is going to 10K. Like, I don't know when. I don't know how long that will take.
In the future.
But I have not wavered 1 minute from that belief. And I remember when ETH was hanging out at 120, people thought it would never hit all-time highs again. All-time highs being like 1,400 or something like this. And here we are. We're already at 1,400. We did it over 10x since then. And this is the lower point during the bear market. All right. So anyway, I don't know what else to say, but I think he's totally right in that you don't notice a difference in the buys at this. So don't time the bottom, I think is another way to say this.
Don't time the peak of bottom.
Don't obsess with that.
Just buy. Just go buy right now.
It's not financial advice.
Whoa. Ryan, what are you bullish on?
Bankless Labs, David.
Yeah.
We're doing going beyond education, tools for the journey. I think it's really cool to have some more dev talent on the team. I'm really excited about the roadmap that we're putting together with for Earnifi, integrating that into the rest of the Bankless product. That's cool. It's cool. Building software, David. Who would have thought?
Yeah.
Two podcasters. Look at us.
A media company buying a software? Wow, a software tool? That's great.
I think it's going to be great for people on the Bankless journey and give us some time, guys, to integrate all of these things together. Right now, there's a separate membership that you have for Bankless and for Earnifi. I mean, we're going to work as we hire people up over the coming months to get this all integrated and feeling really nice and packaged. But I mean, already, dude, this tool, you know what's really fulfilling to me, David, is like, you know, how the one time I've gone to a conference, all of the people who've come up to us and been like, hey, thank you for building Bankless. You helped me on my crypto journey. I got a job in crypto. I got financially independent. As a result of this, I was bullish, and you developed conviction in some assets that you know did really well and continue to perform, and then I'm a long-term holder on. Like all of these things, it's like I feel like it's value that Bankless has provided the community, and Earnifi is another example of this. It's like a way to quantify that. $150 million in confirmed airdrops that people have received in the Bankless journey. You know that thing where we've said crypto pays you to learn about crypto? Yeah. We said that forever. Now we have a tool where you can go harvest these things. You can learn about it on Bankless. Now you can go pick it up. And to me, that's very fulfilling. Like I want to grow those numbers. The number of people that have done well in crypto, who've gotten on the journey through Bankless education, the number of people who have generated wealth from the crypto economy. Those are the numbers that mean the most to me. And those are numbers I think we can grow when we have these sorts of tools. So I am very bullish on what we're building next with Earnifi and everything that's coming with Bankless Labs.
100%. Yeah, we've been teasing like Bankless 2.0 for a while, and we've started to have some of these things emerge. Bankless Collectibles came out a couple weeks ago. We're now announcing this Earnifi thing. We've teased a brand new website. We told people to subscribe to Bankless when that 25% off discount happened last week, but if you didn't, you should have. But there's still more to come. And the cool thing is all of these things do seamlessly integrate with each other once all these pieces are out. So I'm excited for 2023 as we shoot more and more of this ammo that we have of Bankless 2.0 out the door.
David, do you know what time it is now?
Yeah, it's meme of the week time.
Let's look at the meme of the week, and you're particularly bullish on this one. This is getting ridiculous. What are we looking at, man?
This is an article out of the Wall Street Journal titled "Sam Bankman-Fried is super jacked and handsome. The FTX founder is super hot. He's amazing, and we love him so much." And there's a picture of Sam Bankman-Fried just absolutely ripped,
muscle bound. Great. Yeah, looking good.
Yeah,
there,
reminder,
man.
this is a meme. This is not real. Although, like, to this day, do you even know? I don't know.
That's what's funny about it. I mean, you could actually see this in the Wall Street Journal. All right, guys.
I mean, this one's kind of egregious, but...
Stick around, though, for the Moment of Zen. Actually, the Moment of Zen today, we are quick conversation that you had with Dawson, who's the co-founder of Bankless Labs. So stick around if you want to hear about that. Of course, as always, got to tell you about the risks and disclaimers. Got to say, none of this has been financial advice. It never is. Crypto is risky. So is ETH. So is Bitcoin. No matter what price you buy these things at, but we're headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey Dawson, what's Earnifi?
Earnifi is the airdrop checker. Earnifi is a Web3 notification tool that will let you know of all the things you have to go claim for your wallet.
Claim for your wallet. What does that mean?
So claiming for your wallet is things like airdrops, whitelists, NFT mints. Earnifi will check you for all these and let you know instantly what you have to go claim.
Why do I need it?
You need it because without Earnifi, you don't know when you have unclaimed assets. This is tens of thousands of dollars sometimes that are just out there waiting for you, for your wallet specifically.
How many people use Earnifi?
There are over 250,000 people who trust Earnifi for notifications.
Okay, so with Earnifi, I plug in my Ethereum address and it tells me what airdrops I can collect, right?
Exactly. It allows you to do that for not just one address either. You can do it up to 10 addresses.
Up to 10 addresses. And so how much money have you made people?
There are over $150 million worth of airdrops that have been found through Earnifi since launching 2 years ago.
$150 million. So people have put in their Ethereum addresses, multiple of them, into Earnifi, and Earnifi has helped them claim $1.5 million.
Not just 1.5 million, $150 million.
Oh, excuse me, $150 million. That's amazing. Why did you make Earnifi? What inspired you to make it?
You know, I'm a crypto degen just like all of you. I found that I had unclaimed airdrops that I didn't know about. And so I made this tool originally for myself to check my wallets. And then it turned out that a lot of other people wanted the exact same set of features.
So is it just airdrops?
It is much more than just airdrops. So Earnifi began originally from a hackathon 2 years ago as the airdrop checker. And now Earnifi has expanded to pull-up tokens, NFT mints, whitelists, and many other things like pull-up raffles for just all the free things that you don't know about yet for your wallets.
So what do I get if I sign up for Earnifi?
If you sign up for Earnifi, you're gonna be able to check your addresses right now, but you will also be signed up for email notifications when you match a new claimable asset in the future. So this means that when an airdrop goes live, you can be the first to know that your wallets are in that airdrop.
But you can also pay for Earnifi, right? What do you get if you pay for Earnifi?
If you're a serious DeFi user, you should pay for Earnifi because you'll be able to watch more than just 2 addresses. You'll be able to watch up to 10, and that means that you will get these email notifications for up to 10 of your addresses. So you'll know more about all of the addresses that you have and all the assets that you can go claim.
How is Earnifi different from any other airdrop notification service?
Airdrop's much more than just an airdrop notification service. Airdrop is the highest quality. There is zero spam allowed. Everything is manually reviewed, tested, and checked to make sure that it's worth your time. Not just your time, but also your money. Because I believe, just like everyone else who is on the Bankless journey, that we should stay safe and avoid some of these spam issues, some of these bankruptcy issues that we've been seeing over in the CeFi world.
What are Earnifi's plans for the future? Is there a roadmap?
Earnifi has huge plans for the future. Beyond just airdrops, Earnifi is going to be checking you for all the things that your wallet can have. So when new NFTs drop, you can be notified of that. When your ENS names are about to expire, you can be notified of that. When anything happens on chain, you need to be enabled to respond to that with something like Earnifi to notify you right away to go take action. Maybe your DeFi loans are about to get liquidated. Maybe the ENS name you've always wanted is about to go up for auction and you can bid on it. Earnifi will notify you of all these things in the future.